Over to you, Kimberly. Thank you.
Thank you, and welcome to CPA Australia's webinar on the removal of special purpose financial reporting. I'm the Stakeholder Relationship Manager in the Policy and Advocacy team at CPA Australia. Today's webinar promises to be an informative session and will provide more information about the removal of special purpose financial reporting by the AASB. We'll cover which entities are affected and what arrangements are in place for the transition. I'd like to acknowledge that today we are being joined by CPA Australia President and Chair of the Board, Merrin Kelsall, FCPA from Melbourne, Deputy President Rick DeSanti, FCPA from Hobart, and Board Director Peter Wilson, FCPA from Melbourne. Thank you for joining us, Merrin, Rick and Peter. I'd also now like to introduce and welcome CPA Australia Board Director Louise Cox, FCPA from Brisbane, to welcome you all to the webinar. Louise served for 5 years as a member of the Queensland Divisional Council, including as President in 2012. Louise is the Chief Executive Officer of the leading architectural practice Thompson Adset and Chair of Open Minds Australia. Louise has 30 years' experience across the legal, accounting, architecture, education and mental health sectors. I'll now hand over to Louise, who will formally open the webinar.
Thank you. Good afternoon and welcome everybody. I'd like to acknowledge the traditional owners of the land on which we meet today and pay my respects to elders past, present and emerging. I also wish to extend this acknowledgement to other Aboriginal and Torres Strait Islander people who may be present today. Welcome to you all and thank you for joining us from around Australia. As Kimberly said, we're also joined by Merrin Kelsall, FCPA, CPA Australia's President and Chairman. Welcome, Merrin. And my fellow board directors, Peter Wilson, FCPA, and Deputy President Rick DeSanto, FCPA. Welcome to you both. I'm pleased to be part of this policy-focused session for our members on the removal of special purpose financial reporting. The CPA Australia Board is acutely aware of the significant pressures you are all under, the work you're doing and the importance of the advice and guidance you are providing to your clients in the current environment. CPA Australia will continue to support you by providing information, resources and tools. The dedicated COVID-19 hub on our website features a range of resources to assist you and your clients to respond to the impacts of COVID-19, including things as business advice and tips, financial reporting and auditing resources, fact sheets, FAQs, webinars, podcasts, and information about regulatory responses. We know you're also playing an important role in supporting your clients, co-workers and staff who may be experiencing mental health problems during the pandemic. CPA Australia has developed a mental health toolkit with useful links to mental health information, resources and support, which is also available on our website. This session is designed to provide some information around the decision made by the Australian Accounting Standards Board, AASB, to remove the ability of some entities to prepare special purpose financial statements, and to introduce a new Tier 2 general purpose financial statements framework that will replace the special purpose financial statements for some for-profit entities and for entities that currently prepare Tier 2 general purpose financial statements. The session will also highlight which entities can continue to prepare special purpose financial statements and some details around the transition process that has commenced. CPA Australia's policy team has published fact sheets on this topic, which can be found on the financial reporting page in the professional resources section of our website. Finally, a reminder too that our Congress event this year will be an interactive online experience over 3 days from the 10th to the 12th of November. I want to encourage you to check out the great program on our website and register to attend. Amidst the barking dogs, I'll hand back to you, Kimberly. Thank you.
Thank you, Louise, and welcome everyone. It's my pleasure today to introduce my colleague Ram Subramanian. Ram Subramanian is the Policy Advisor reporting within the Policy and Advocacy team at CPA Australia. His key responsibilities include formulating policy positions and commenting on reporting developments, including input into the developments in the not-for-profit sector. In his role, Ram is also involved in the provision of technical support to CPA Australia's membership and other stakeholders, as well as representing CPA Australia in various forums. Previously, Ram has worked in senior roles within the public practice sector in the United Kingdom. Ram's previous role involved managing the technical advisory services of a major professional accounting body in the United Kingdom. Today, we'll be taking questions through our Q&A box, and please make sure you direct questions to all panellists. We'll address questions at the end of this session, and we'll do our best to get to as many as we can with any time remaining. For any troubleshooting inquiries, please message our host, Sally, in the chat box. Well, it's now time for our session to commence, so I will hand over to you, Ram.
Thank you, Kimberly, for that introduction. Hello, everyone, and welcome. I'd also like to thank Louise for her introduction to the topic earlier, and I would also like to acknowledge and welcome the board directors who are attending this presentation. And of course, welcome to all the members who have registered and are attending this presentation. To preserve bandwidth, I'm going to put my camera on, I'm going to turn my camera off if that's okay, but of course you'll continue to hear my presentation as I go through the slides that I've prepared for this session. So here we go. So removal of special purpose financial reporting. This is a complex area with lots of different technical aspects to it. We have about 1 hour or so to go through this session. So I will keep the discussion at a very high level and answer some of the most common questions we are hearing from members as part of this webinar. There is plenty of material on the more nuanced technical details surrounding the project available from our website. Louise did mention the fact sheets, which will be signposted later. And of course, there's plenty of material on the AASB, the Australian Accounting Standards Board's website as well, for those who are interested in the more technical aspects. I will, of course, cover as much as I can as part of this presentation. And of course, if you're not able to find the answers for your specific questions from the material that is already available, the policy team is more than happy to take your questions and answer them subsequently. So this is the big burning question that we keep getting asked by members and others. Is it true that no one can prepare special purpose financial statements anymore in Australia? And the answer is a big emphatic no. Special purpose financial statements can definitely be prepared by a vast majority of entities in Australia. Now, it of course depends on the circumstances and when special purpose financial statements can continue to be prepared and when those who are currently preparing special purpose financial statements can no longer do so. And I'll go through that with you in my next few slides. The Australian Accounting Standards Board, as I said, has already set in motion a project, and certain parts of that project are already in place. So I will also signpost those changes that have already been put in place as well. And I should probably also highlight that there are different approaches being taken by the AASB for different sectors. So I'm going to cover broadly, if you think about it, there are 3 broad sectors that the AASB is interested in when setting standards for financial reporting. That would be the for-profit sector, which includes corporates and others, the not-for-profit sector, and that by that I mean the private not-for-profit sector, your charities, incorporated associations, and the likes, and finally the public sector. I will not be covering the public sector in any great detail during this session, primarily going to be looking only at the for-profit corporate sector and also the private not-for-profit sector. So you may ask, why am I not covering the public sector? Well, there's a couple of reasons. The first reason is that the AASB hasn't yet commenced its project on what it intends to do for the public sector. That is still some way off, I would say. We're probably expecting them to make some start on it by next year, or perhaps second half of next year. But I'm only making an educated guess on that because it'll depend on a number of other factors. The other reason I'm not going to cover the public sector in any great detail is because a majority, if not all, entities in the public sector already do general purpose financial reporting. So your three tiers of government, your central government, your state government, and your local government, most of them already prepare general purpose financial statements. So there is a general view that then the public sector is not going to be so significantly affected by the removal of special purpose financial reporting by the AASB. Okay, so let's just look at what these changes mean, firstly, for the for-profit sector. I've put up a little illustration there to give you an idea of the current state. So there's approximately 2.8 million companies in Australia regulated by the Australian Securities and Investments Commission, ASIC. That 2.8 million number is a rough number that I picked up from data that the ASIC puts out regularly. I believe this number is from August this year. A vast majority of those 2.8 million companies don't have any financial reporting obligations under the Corporations Act. Many of them may prepare financial statements for other reasons. The most common reason that we hear that the financial statements are prepared are for tax purposes. Of course, there may be other reasons like for internal management purposes and also for other external parties like banks and others who may need financial statements from the company. So then we get to that next little green segment there, where there is some variation in how financial statements are prepared. So this little green segment reflects large proprietary companies, unlisted public companies, and a few others who lodge financial statements with ASIC. For these entities, there is a choice, and the choice is based on something called the Statement of Accounting Concept 1, the definition of the reporting entity. SAC 1 has been around since 1990. And SAC 1 effectively introduced a differential reporting framework back in the day, which allowed effectively for entities to determine, self-assess, I should say, whether they were a reporting entity or not. And if they were a reporting entity under SAC 1 requirements, they would need to prepare general purpose financial statements. And if they determined that they were not a reporting entity, they could choose to prepare special purpose financial statements. It is that green segment that is effectively affected in the corporate sector, and I'll pick up on that in my next slide. The last little segment you've got there is your listed companies and other very large companies like super funds and others, financial services entities who must prepare general purpose financial statements. Their position hasn't really changed from the current position to the next. So without further ado, let's move on to the next slide to just give you an idea as to what's happening. So this is the future state. And the future state is effectively coming into play from the 1st of July next year. So this is the big part that you see at the top, the small proprietary companies part. That has not changed, as you can see from my previous slide. So effectively, a large majority of companies, effectively small proprietary companies, can continue to prepare special purpose financial statements. Why is that? It's because they don't have any obligation to prepare financial statements or financial reports under the Corporations Act. It's only for those entities, when I say entities, I mean corporate entities, which have obligations to prepare financial reports under the Corporations Act, that this change will be important. So that's where we come on to that next box, which is around approximately 13,000 entities. These are large proprietary companies, as I said before, unlisted public companies, and some others. When you might ask what these some others might be. So you've got a few like small companies which are foreign-owned, and some where the shareholders require them to prepare financial statements under the Corporations Act. These may have to now prepare general purpose financial statements from the 1st of July 2021. And there's of course, no change to the listed companies and others, which I've signposted in my previous slide. And then there are other for-profit entities like trusts, partnerships, sole traders, self-managed super funds. All these entities do prepare financial statements. And in fact, for SMSFs, there is legislative requirement for them to prepare financial statements. These can also continue to prepare special purpose financial statements. And they're not affected by the AASB's project to remove special purpose financial statements. Now, there is a caveat here, which I should say. And this is basically for the types of for-profit businesses that you see on this page. Some for-profit entities that are listed here may need to prepare general purpose financial statements based on the AASB's change. And I'll explain that in a short while. Also, for those entities that continue to prepare special purpose financial statements, there are proposals from the AASB for some additional disclosures, and I'll pick up on that as well in my subsequent slides. Okay, so just a little bit of background to the project. The big question, why did the AASB move on removing special purpose financial statements from its reporting framework? Well, I suppose the big issue that the AASB has is that when someone prepares financial statements and states compliance with Australian accounting standards, they want to see those financial statements to be of a certain quality. And we can sort of appreciate that because you want to see some level of consistency, comparability, etc., when financial statements are prepared in accordance with Australian accounting standards. So that was the main reason that the AASB started on this project. Now, there are a few other reasons as well, which I've highlighted on this slide, and I will go through them now. So the International Accounting Standards Board, that's the AASB, issued a revised conceptual framework a few years back. And in the revised conceptual framework, they introduced a new definition of the term reporting entity. And that is an entity that is required or chooses to prepare financial statements. A reporting entity can be a single entity or a portion of an entity, or can comprise more than one entity. So this could be an entity that is required by legislation or otherwise to prepare financial statements, and that would be a reporting entity. The point that the AASB is making here is that the definition of reporting entity in the AASB's revised conceptual framework refers to boundaries for economic activities, including an entity's financial statements. So, for example, a reporting entity could be a group of entities, and the consolidated financial statements is for that group, which is the reporting entity. This is fundamentally different to the definition of reporting entity used in SAC 1, which is basically requiring you to make a self-assessment as to whether you're a reporting entity or not based on certain criteria set out in SAC 1. And then you determine whether you must prepare general purpose financial statements or whether you can choose to prepare special purpose financial statements. So the AASB asserted that the definition in the AASB's conceptual framework is quite different to the definition used in the Statement of Accounting Concept 1. Now, why do we refer to the AASB's conceptual framework? Well, that's because we use IFRS for our Australian accounting standards, and IFRS is based on the AASB's conceptual framework. So we have to use the AASB's conceptual framework in Australia as well. It's a must. Otherwise, we can't use IFRS standards, which form the basis for Australian accounting standards. Now, let's look at the second reason the AASB highlighted in its rationale for removing special purpose financial statements. They call it the SPFS self-assessment problem. Back in 2014, the AASB issued a research report that was called the application of the reporting entity concept and lodgement of special purpose financial statements. This report identified a number of findings that indicated what the AASB calls the special purpose financial statement self-assessment problem. So the findings were that the reporting entity concept is not well understood by preparers and others. It is not applied consistently in practice. So what they mean by that is they have identified situations where an entity should have really assessed itself as a reporting entity under SAC 1, but that entity has decided, for whatever reason, not to assess itself as a reporting entity and has decided to prepare special purpose financial statements accordingly. And it's also probably worth noting that the assessment is an annual assessment. So every time you prepare a set of financial statements, you're required to assess whether you're a reporting entity or not. So that's one of the findings of the AASB research project. The other problem that the AASB identified is that it is too subjective for regulators to enforce effectively and does not create a level playing field. Because it's a self-assessment by the entity itself, the regulators then have to sort of sit in the shoes of the management of the entity and determine how they came about that conclusion of whether they were a reporting entity or not. So those were the primary reasons why the AASB decided that the ability to prepare special purpose financial statements in accordance with Australian accounting standards needed to be addressed and removed. So let's now look to who is affected. I already signposted to some extent who is affected, and I touched on those three major areas, the three sectors, if you wish. And I've also obviously touched on for-profit entities and what sort of a rough idea of who is going to be affected in terms of the changes. I will, of course, talk about a little bit about what the changes are, when they come into play, etc., etc. I'm also going to touch on not-for-profits, as I said earlier, but not so much on public sector entities. So let's move on then to the next slide. Okay, so as far as the where is concerned, obviously it's an Australian specific issue. This doesn't really affect anyone else other than Australia. This is about Australian financial reporting, so it's an Australian issue. For-profit entities, it's mostly a federal matter. So most for-profit entities are under one or other form of Commonwealth-based legislation or regulation. And the transition to general purpose financial reporting for these entities are already underway, and I'll explain that in a bit. For private sector not-for-profit entities, the where is a little bit more complex, because they're not only regulated at the Commonwealth level, they're also regulated at the state and territory level. And there are a few challenges with that, because the requirements are always the same. They can be quite different, in fact. And so the AASB is currently working through various options to address how these different types of regulations can all be aligned when they introduce a new reporting framework for the not-for-profit sector. And I've already touched on the public sector entity space, so I won't elaborate on that anymore. So let's then look at some of the other important questions: the what, the when, the how, and the who. We've already touched on some of that, but I'll go into it a little bit more detail. Before I jump into what the AASB has done, I'll probably just touch on a change that happened in the legislation applicable to corporates. The large proprietary companies threshold was changed under the Corporations Act, and that's effective from last year. The thresholds were effectively doubled to 50 million gross revenue, 25 million gross assets, and 100 employees. And any company that meets 2 out of those 3 would be considered large under the increased threshold test. Now, the reason I highlight this is one of the issues that CPA Australia, of course, has been actively involved in the development of the proposals here. And when the AASB initially announced that it was going to look at removing special purpose financial reporting, one of the things we considered important was the reporting requirements as they are set out in the under the Corporations Act for companies. And we joined up with Chartered Accountants, Australia and New Zealand, and wrote to Australian Treasury, asking them to review the Corporations Act and asking them to consider the thresholds that are in place, that were in place at that time for companies. And coincidentally, I have to say coincidentally, because it's something that the Treasury might have already had in place before we wrote to them, and they did put out a consultation asking whether thresholds should be changed, and then they also put out a proposal that thresholds should be doubled, and they ended up doing that. So legislation now reflects the new thresholds that you see there on that slide, the first heading up there with the bullet point underneath it. So let's now look at the changes that the AASB has already made for for-profit entities. So the first one I'd refer to there is AASB 2020-2, removal of special purpose financial statements. This removes the ability of for-profit entities with legislative or other reporting requirements required under compliance with Australian accounting standards to prepare special purpose financial statements. The changes will effectively impact large proprietary companies, and that includes grandfathered companies as well, I should say, financial services licensees, other Corporations Act entities such as unlisted public companies, which I've already mentioned, and small proprietary companies that are either foreign controlled, or one other group would be those that have crowdsourced equity funding requirements applying to them. It may also apply to other for-profits like cooperatives and mutuals, which are not necessarily covered under the Corporations Act. Entities within the scope of AASB 2020-2, which I've just mentioned, will no longer be able to use SAC1, definition of reporting entity, to determine whether they can prepare special purpose financial statements. Instead, their minimum reporting requirements will now be a Tier 2 general purpose financial statements. So I do say minimum reporting requirements because, of course, if someone chooses to, they can do Tier 1 full Australian accounting standards. But as a minimum, they must do Tier 2 general purpose financial statements. This financial statements must comply with full recognition and measurement requirements of Australian accounting standards, which will include the need for consolidation and or equity accounting where applicable. With Tier 2 general purpose financial statements, the only difference really will be around disclosure. So there will be reduced disclosure or simplified disclosures for those entities that will no longer be able to prepare special purpose financial statements and will now be required to do general purpose financial statements. One other thing I should probably mention is the effective date of AASB 2020-2, which removes the ability to prepare special purpose financial statements. It's effective from 1st of July 2021. So that would basically mean any entity that is affected when it prepares its financial statements for 30th of June 2022 will need to do general purpose financial statements, tier 2 at least. We did ask when we provided our thoughts on the proposals around AASB 2020-2, we did ask that the AASB defer the effective date to the 1st of July 2022. And I should probably mention that they originally considered introducing the changes from the 1st of July 2020 this year, but at least they deferred it by 1 year. And we did ask for a deferral by 2 years, but ultimately it ended up being a 1 year deferral. Interestingly enough, we have once again written to the Australian Accounting Standards Board to ask them to consider delaying the effective date of 1st of July 2021 by 1 year. And the reason we say that is because of the current circumstances we see ourselves in, the global pandemic, the COVID-19 related pandemic that we've got. We feel that the AASB has got something here that it needs to take on board and take into consideration when thinking about the effective date, which is already in place, I have to say. So if the AASB do decide to defer the effective date by another year, they'll have to open up the standard and reconsider what the issues are around the effective date deferral. But we have made that request. The other thing I'll probably mention with AASB 2020-2 before I jump into the simplified disclosure requirements is the issue around grandfathering provisions for certain entities. So the grandfathering provisions are basically where if you've got a trust or a partnership or some other type of entity which is not required by legislation to prepare financial statements, but it has a constitutional document or some other similar document that requires it to prepare financial statements, and those financial statements make reference to Australian accounting standards, and I use that term quite specifically, Australian accounting standards, then any such entity which existed before the 1st of July 2021 is grandfathered. So they can continue to prepare special purpose financial statements post 1st of July 2021, except, and there's a big except, if their constitutional document is amended for any reason post 1st of July 2021, and it doesn't even have to do with the financial reporting provisions in that document. It could be for any other purpose that the document is amended. Then the grandfathering exemption is switched off. That's what AASB 2020-2 says. So basically, they will have to then switch to general purpose financial statements, tier 2. So that's something to keep in mind. So if you've got clients or you're engaged or employed with an entity like a trust or a partnership or some other type of entity, not necessarily a company, which has some requirement to do financial statements, not through legislation but other reasons, be mindful of this grandfathering provision and be particularly mindful of this amendment clause within AASB 2020-2, which basically could affect your ability to continue to prepare special purpose financial statements. So let's now look at the simplified disclosures. So the simplified disclosures are basically replacing tier 2 reduced disclosure requirements that currently exist. Quite a few companies and others particularly in the not-for-profit sector, currently do Tier 2 general purpose financial reporting. And this particular standard, AASB 1060, will replace the existing Tier 2 RDR framework. The Tier 2 RDR framework is slightly different. It's not one single standard. It's basically a reduction in disclosures for Tier 2 entities through graying out certain disclosure requirements in each of the accounting standards. So under the current Tier 2 model, you would apply all the recognition and measurement requirements in all the accounting standards, and then you would have the ability to not disclose those paragraphs which are excluded from each of those accounting standards. What the AASB did with 1060 is they consolidated all the disclosure reductions, or sorry, I should say it the other way around. All the requirements for disclosures, simplified disclosures, have now been consolidated into one single standard. That's AASB 1060. And that also comes into effect from the 1st of July 2021. So that's important to keep in mind. Now, even more important thing to keep in mind is any entity that currently does Tier 2 reduced disclosure requirements will have to move to AASB 1060 from the 1st of July 2021. So you've got to keep that in mind. So this is not just affecting those who are currently doing special purpose financial reporting and are affected by the change. This particular requirement, AASB 1060, will also apply to those entities that do Tier 2 RDR financial statements currently. I'll probably highlight one final thing. Exposure Draft 302, disclosures in special purpose financial statements. This is not yet finalized, I have to say. This is still an open issue, and we probably will expect the AASB to finalize this particular proposal very soon. I don't recall that they're going to consider this at their next meeting, which I think is in November this year, which might mean that they may not consider it till next year. So this is still an open thing. I don't know the exact outcomes, but let me tell you what they're proposing under 302. So what they're proposing is basically for any entity that currently prepares special purpose financial statements and will have the ability to continue to prepare financial statements, and those financial statements state compliance with Australian accounting standards, the AASB is proposing that such entities should make additional disclosures in their special purpose financial statements. So what are those disclosures? They would be to disclose the basis on which the decision has been made to prepare special purpose financial statements, disclosure around the material accounting policies applied in the special purpose financial statements, and including information about those policies. There's proposed requirements for disclosures around consolidation and equity accounting, and also disclosure requirements around whether the financial statements comply or not with the recognition and measurement requirements in Australian accounting standards. I have to say that CPA Australia put in a submission jointly with CANZ, and we have requested that AASB do not proceed with the proposals contained in Exposure Draft 302. And there's a couple of reasons we've said that. One is that these are special purpose financial statements. The AASB normally doesn't set standards or requirements for special purpose financial statements. Another reason is that we think that there is no real regulatory framework in place to oversee the preparation of financial statements for such entities. Also, we believe that the cost of compliance will far exceed the benefits that might arise from this particular proposal. And the submissions are available on our website, and please do refer to them if you're interested in what CPA Australia has said on this particular proposal. I did spend a little bit of time on this slide, so I will quickly move on to the next area or the next sector, which is not-for-profit entities. As far as the for-profit space goes, more or less the proposals are done and dusted. So the standards are in place, 2020-2, 1060, the requirements are in place. The only thing that's really pending is exposure draft 302, the proposals around additional disclosures for special purpose financial reporting. I suppose the other thing maybe that the AASB may contemplate is the deferral of the effective date from 1st of July 2021 to another year. But other than that, for the for-profit space, more or less the matter is completed. That is not the case for the not-for-profit sector. So here we have a slide that shows you roughly where we are with not-for-profits currently. And I'm using some very broad analogies here, so forgive me, this is not exactly how the sector looks because the sector is extremely diverse and extremely complex. I'm trying to draw some kind of a semblance of logic to it. So this is what it might look like. So there are approximately 700,000 not-for-profits. We don't have an exact number, but that's roughly what we think it is. A majority of them do prepare special purpose. In fact, quite a few of them may not be preparing any financials because they may be unincorporated associations, or they may be little library clubs or parent-teachers associations, which are very, very small, really don't have any external reporting requirements, and they may not have any formal financial reports prepared. But a majority of them do prepare special purpose financial statements. And the little red pyramid, the triangle at the bottom, is probably the only group currently that does general purpose financial statements. Who are these? Well, that's basically any entity, including entities in the not-for-profit sector, which considers themselves to be a reporting entity under SAC 1. And there are some law or legal requirements as well, which specifically state that not-for-profits caught under that legislation must do general purpose financial statements. So examples would be higher education under the Tertiary Education Quality and Standards Agency, or TEXA. Another one would be the Office of the Registrar of Indigenous Corporations. They specify financial reporting requirements for ORIC registered Indigenous corporations, and those that do have to prepare financial reports under the legislation, the CATSI Act, do have to do general purpose financial reports. So there are very few not-for-profits which are currently already doing general purpose financial statements. Apologies, I don't have a number for that, but they do. But other than that, your small, medium, and large not-for-profits currently do prepare special purpose financial statements because primarily the legislation allows it. So let's just look at the future state, what this might look like in the future. I did mention in my previous slide that there will be some entities which are not going to be captured by the change at all. And these are very, very small not-for-profits which have no reporting requirements whatsoever. And they can continue to, they probably will continue to be unaffected by the change. Now, this is what the AASB is currently proposing. And I'm roughly referring to it as small, medium, and large not-for-profits because the AASB hasn't quite arrived at how to draw the line, if you wish, between those three categories. For simplicity's sake, the AASB is calling them Tier 1, 2, and 3. Tier 1 would be your large not-for-profits, which must prepare general purpose financial statements. Tier 2, under AASB 1060. Many of them probably already do. Tier 2 would be medium not-for-profits who must prepare general purpose financial statements. And the AASB is proposing to put together a simplified accruals-based financial statement financial standard for these entities. And the AASB is currently looking at what that might look like. And for very, very small not-for-profits, the AASB's current thinking is that they might come up with a cash accounting standard for these very small not-for-profits. And there's a couple of reference points for the AASB in this. One is the New Zealand Accounting Standards Board has got something very similar for their not-for-profits over there, and they're looking to that model to borrow some of those features for Australian reporting. And the other reference point is the, I suppose, ACNC, the Australian Charities and Not-for-Profits Commission, splits charities that are registered with it into three categories: small, medium, and large charities, and that might be a reference point as well. But of course, charities are only around 50,000 entities, and we have 700,000 odd not-for-profits. So the issue is a much wider issue than just charities registered with the ACNC. I'm going to quickly go through a few other matters which are relevant to not-for-profit entities. The AASB has already introduced one change to disclosures for not-for-profit entities, which are required to adopt or apply AASB 1054, which is Australian Additional Disclosures. And that change was brought in by AASB 2019-4. I did talk to you about ED 302 a little while back, and effectively this is the equivalent for the not-for-profit space, and the equivalent is already in place. It's in place for accounting periods ending on or after 30th of June 2020. So if you're currently preparing financial statements for a not-for-profit, please keep in mind this particular change, because these disclosure requirements may apply to you if you have to apply AASB 1054. The two common types of entities that I can think of which have to apply AASB 1054 are charities registered with the ACNC and companies limited by guarantee registered with ASIC. If you're one of these types of entities, then you must adopt the new disclosure requirements that came in through AASB 2019-4, which is currently now in AASB 1054. So what are the disclosure requirements? Very similar to what's being proposed in AASB's Exposure Drop 302. So you've got to disclose the basis on which the decision to prepare special purpose financial statements were made. You've got to disclose information around consolidation or equity accounting, whether you've done it or not. And if you haven't done it, why? And if you haven't made an assessment of whether you have subsidiaries or associates or joint ventures, then you need to make disclosure around that non-assessment. You also have disclosure requirements under material accounting policies that you've applied in preparing your financials. And one other thing that is there in this particular disclosure set, which has not been proposed in 302, is that if an entity hasn't made an assessment under the requirements, then they need to make a disclosure of that non-assessment and they have to do nothing else. Have a look at 1054, have a look at our material that we put out on this particular topic. And if you do have any further questions, we are happy to help. Now, one of the other issues I'll very quickly mention is one of the issues that the AASB is working on is the proposed definition of not-for-profit, which is different to their current definition. And I've put up there on the slide what they're proposing under the first bullet point. And the second bullet point is an additional implementation guidance that they are proposing to put in place as well. I'm quite conscious that we've got only about 10 minutes left. I won't go into the technical details around the proposed definition of not-for-profit. What I, however, will do is in my next slide signpost some of the fact sheets that Louise mentioned at the very beginning. Please do go have a read of these fact sheets, and if you have any further questions, we are more than happy to help. I'm now going to switch over to the question and answer session, and I will turn my camera on. And let's look at what questions may have come in. Kimberly, hello.
Hi, Ram. So we have quite a few questions that have come through the Q&A box, which is fantastic. A lot of engaged and interested people. So I just thought we'll try and get through a few, and then perhaps we can collate the rest of the questions, and we'll send them out with a copy of the recording and the webinar after the session.
Sure.
So I'll just kick off with a couple. The Queensland Building and Construction Commission states that our clients must use all relevant Australian accounting standards in the preparation of the financial statements that will form the basis of the MFR report. Does this preclude SPFS?
From the 1st of July 2021, yes. However, this is an open matter that we probably have to take on as a policy issue with the QBCC, because there may be quite some small entities that are licensed under the QBCC requirements, and we may have to see if it's appropriate for them to do Australian accounting standards-based general purpose financial statements, for whether that's a requirement for such entities which may be quite small, but that is an open matter. But the answer at the moment is if you have a requirement to prepare financial statements in accordance with accounting standards under the QBCC requirements, you will need to switch to Tier 2 at the very least from the 1st of July 2021.
Okay. Thanks, Ram. Could you please, one of the questions, could we clarify the grandfathering provision in relation to trust and partnerships and the amendment prior to 1 July 2021? If the client has, for instance, in the trust deed referring to the Australian accounting standard, do they need to do general purpose financial statements after?
So if the trust deed makes reference to Australian accounting standards in the context of preparing financial reports or financial statements, and the trust deed already exists, obviously the trust deed is already in place before the 1st of July 2021, that entity would be grandfathered. So what that basically means is that entity would be able to continue to prepare special purpose financial statements post 1st July 2021. The only caveat is if the trust deed is amended for any reason post 1st July 2021, they will lose the ability to prepare statements. As long as there is reference to the Australian accounting standards clause in their trust deed, they will then have to switch across to general purpose financial statements.
Okay, thank you. Hi, we are a small franchising company. We need to prepare special purpose financial statements every year and send them to be audited and then send them to all our franchises. How does this change impact our company?
It really will depend. I don't know exactly what the circumstances are for this particular franchising company, but I can make certain assumptions. So if the franchising company is a small proprietary company, which is not required to prepare financial statements under the Corporations Act, then they are not affected. That's one of the slides I presented earlier on. However, if they have certain constitutional requirements that say that they must do financial statements in accordance with Australian accounting standards, then the issues that I mentioned earlier about grandfathering come into play. But broadly, if they're a small proprietary company and they don't have any obligations to prepare financial statements under the Corporations Act, they wouldn't be affected by this change.
Okay. Can a not-for-profit company limited by guarantee with a turnover of under 1 million and lodges with ASIC, sorry, the question just disappeared. I'm sorry, now I can't find that question. I don't know if you can see it, Ram, in the Q&A box.
Yeah, I'm just trying to see if I can find it as well. Apologies. Yeah, here we are. Can a not-for-profit company turnover under 1 million, and thus Lloyd's Dancing continue to prepare special purpose financial reports. The answer is yes for the time being. They can continue to prepare special purpose financial reports as long as they have assessed themselves to not be a reporting entity. Don't forget it's an annual assessment, as I said earlier. However, the AASB, as I said in one of my presentation slides, is working on a framework for not-for-profit financial reporting, and for such a company limited by guarantee, it is quite possible that in the very near future, maybe in a year or two, they may have to switch across to some form of simplified reporting framework, which is not special purpose anymore. But we are hoping that it would be a simplified framework, as I said. Thank you.
Thanks, Ram. Okay, so just following on, does that mean not-for-profit sporting clubs can continue to produce special purpose financial statements? And what date is it looking like the general purpose financial statements will start applying to them?
Yeah. It also says unknown on date and thresholds. It is unknown on date and thresholds at this point in time, unfortunately. The AASB is still working on how to bring in the thresholds, how to implement them, because it's not as simple. Because in New Zealand, they've got one single legislative framework, and applying thresholds is not so hard. Here, because we've got state legislation, which is all quite different, a unified set of thresholds is not as easy. As the AASB is working. So for a sporting club, it depends on what legal form the sporting club takes as well. If, say, for example, an incorporated association in Victoria, it will have certain reporting requirements under that legislation. But currently, they can still do special purpose financial statements because the legislation doesn't require them to do purpose at this point in time, and neither does the AASB. Keep in mind those additional disclosure requirements I mentioned, if it affects you. I don't know what form the sporting club takes, but if it's, say, for example, a company limited by guarantee, they do need to keep in mind those additional disclosures that come in through AASB 2019-4. But broadly speaking, they should potentially, I would think, be able to continue to do special purpose financial reporting.
Okay, excellent. Well, I think if it's all right with you, Ram, we might then capture the rest of the questions and prepare a response as part of when we send out the email. So I just want to say thanks again, Ram, very much for sharing your insights today. There was a lot of interest and feedback about this webinar topic, so hopefully this has helped answer many questions for our members. Just a reminder as well, we are seeking nominations for our Centres of Excellence at the moment. We have vacancies in 4 of our Centres of Excellence listed up there. And the Centres of Excellence play a vital role in supporting our policy, advocacy and thought leadership activities at CPA Australia. So I would encourage you to look at nominating to apply, and there's a web link on that slide that we'll share as well for those of you that are interested in applying. We also have our divisional council elections open for 2020. So for more information and to vote, please go to our website, cpaaustralia.com.au and /council elections. So once again, a big thank you to Ram, and I'll now hand back to Sally to close the webinar.
Great. Thank you, Kimberly and Ram, and thank you to everyone for your participation. In the next 3 working days, you will receive an evaluation survey accompanied by the recording of this webinar and the Q&A. We really appreciate your feedback, as it is extremely valuable to CPA Australia to help us to deliver better events for you. Thank you again, and we look forward to welcoming you to another CPA Australia webinar soon. Thank you and have a lovely day.